Who owes you money? All right, what would this category be giving you more information about? Who owes you? Balance sheet, typically accounts receivable. So if you have accounts receivable, that means you're doing the work first, you're invoicing the client, therefore you have to track accounts receivable. Where do you normally go to track accounts receivable? You normally go, let's go right click and duplicate the tab. You normally go into the sales, which is basically your customer center. And here's all your customers that you could track the AR over here, and you can track the invoices. But we also have reports based on that information, which is the classical double entry system. We might call them subledger reports in a textbook. So accounts receivable aging summary, if I open that, this is the one that's going to be used most often typically. And you can see here that it's breaking out the accounts receivable by how old they are. Why is this the one used most often? Because this one is one that we might use to calculate or estimate how much of the accounts receivable we're not going to be able to collect. In other words, the longer someone has not paid us, the overdue invoice is, the more likely that person is a deadbeat and they're not going to pay us in the future. And so that means that we might make an estimate assuming that that's not going to be paid, and we could use an allowance method for accounts receivable to report the proper accounts receivable. Notice you can find this information again internally, like in here, to look at and sort the past due data to try to collect on it. So that's why a standard subledger we don't use as much in practice, because we kind of do it in here, but we still need that aging report. We got the accounts receivable aging details, similar report, collections report. So if we open up that one, obviously we're trying to collect on the accounts receivable. So this is giving us all of our customers and the outstanding invoices for those customers. Let's close that one out. Subledger type of report, customer balance summary and customer balance detail. Let's go to the detail one. This is the standard subledger type of report, which is going to give us, closing the hamburger, all of our customers that have outstanding balances, the invoices that are outstanding, and the total, if I have my dates right, the total should tie out to what's on the balance sheet. 528152. Balance sheet is 528152. Note that QuickBooks will force us to have these two things in balance by making us record a customer every time we post something to accounts receivable. So that's great. So there's that one. But we don't use this one as much because we can get this information usually internally right here. That's why we don't go there possibly as much as you would think. Invoice list. So the invoices are the items that increase the accounts receivable. Invoice and receipt payments. So this is going to give us more detail possibly about not only just the outstanding invoices, but the invoices and payment receipts, which is the decrease to accounts receivable. Open invoices, which again are the ones that should be creating the current balance in accounts receivable because they have not yet been paid. A statement list. So we have a list of the statements. Remember that the statements are the things that we're sending out to clients. So there's none in here, but if an invoice is outstanding, then we could resend the invoice to remind the client. But what if they have two invoices that are outstanding? That's when we might make the statements, which kind of combine the invoices together. We've got the terms list. This is going to be the terms in terms of net 30 and so on and so forth that we put on the invoices. We possibly don't use this list as much. These are just the items that would be in the invoice when we construct the invoice typically. Unbilled charges. So these would be things like we enter time into the system that's billable time, meaning invoiceable time, or we enter expenses that we make billable, that meaning we're going to pull those into the invoice, constructing our invoice based on those. And this gives us a list of those items that we've said, hey, look, we need to create an invoice based on this expense that we entered in essence. And so we have to pull those into an invoice so that we can invoice the client for them. So unbilled time, so those are the charges. Unbilled charges would be like the billable expenses. Unbilled time would be like we had billable time. If you're in like a CPA firm or a law firm, people do work, and then we haven't yet made an invoice for the billable time.